This is the briefing for Friday, February 23rd. Well, I was unable to do a briefing last night, but I'll catch it up tonight. The main thing that's happened in the stock indices is really related to NVDA. NVDA had stellar earnings and revenue growth, and outlook was excellent. That resulted in the entire market, NVIDIA pulling the entire market up on Thursday. And we had a little bit of follow through today before we saw some type of decline. Now, looking forward, this is a 60-minute chart of the spiders. This is a 60-minute chart of the Qs, and the same thing for the IWM. Now, we have some intermarket divergences going on here, so you can see it pretty clearly. This is the high in the spiders, who are doing much better than the Russell. The Qs lagging slightly, and the IWM really just lagging tremendously in following along. That probably has a lot to do with the fact that NVIDIA and then a lot of the tech stocks really gained momentum as a result of their earnings. Now the question is NVIDIA going to be able to continue to hold up the rest of the market? We do have some intermarket divergences that are existing, and volume is still extremely low, which is very concerning. Now, this is the spiders on a daily basis, so you can see we broke out above this 504 area on Thursday's trading, and had some follow through in today's trading, but you can see what's happening with volume. This is volume in the spiders. 52-week highs minus 52-week lows really is beginning to decline. You can see a little bit of divergence there in that as well, but that's still a pretty good number. Biggest thing here is what's happening with volume and what's happening with market breadth. So you can see the divergence in market breadth. So it is easy for a highly weighted stock to carry the rest of the market, at least initially, but sustaining that move is very, very difficult unless you start to see the other stocks within an index begin to follow and to catch up with the rest of the market. Looking at where we are with the Qs, you can see the same thing, slight new high over this high, testing this 440 area, which is upside resistance. Once again, volume falling off pretty dramatically, and certainly a huge divergence in NASDAQ breadth as well. So the majority of the market, while the index is up based on the higher weighted stocks, the majority of the market is not really following along with the rest of this move. I mean, look at this, 377 shares positive in the NASDAQ in today's trading. In the spiders going back, only 665 shares positive in the spiders, or in the S&P, I should say. So basically, the internals of this rally so far are what we've seen, pretty much going forward is that it's weak, and that causes the pauses that we get. The question is, are we going to see anything greater in degree of time and price than these pauses that we're seeing right now? So we have to watch what happens basically on a short-term basis, and looking at short-term, the convictive buying on a gap. This is convictive buying that buyers just flooded the market at the open, and you can see at the beginning of that gap, if that gap is not defended, then that's going to suggest it's going to get completely retraced. So that would then suggest that about the 502, 503 area in the spiders is going to be support. In the Qs, it's going to come in right around the 433.50 area. And then, of course, in the Russell, it's going to be 196. Now, going back to the Russell on a daily basis, you can see the difference here. You can see this rotation that's occurring. It tested and tried to trade above the 200 level today, but then it couldn't hold it, traded back down, and then closed right at the 200 level in today's trade. I think the close was at 199.93. Breadth in that there's not a divergence here because we didn't see a higher high over this high, but breadth is pretty tepid in the Russell as well, and once again, volume falling off. We are neutral in terms of overbought and oversold, and you can see that right here. So that gives the market the opportunity to really continue moving higher, or we could see some type of a move back to the downside. The important aspect going forward for next week is going to be the gap and holding the gap, and then this 196 area in the Russell. I would be surprised and would suggest a lot of weakness coming into the market if this gap is retraced. But so we'll have to just see what happens the first part of next week. Looking at total volume, you can see total volume is down in the NYSE, and the trend in volume in the NASDAQ is down, and you can see it was down even more in today's trading. So it's going to be interesting to see how that is resolved. Looking at the other internals, you can see that the percentage of stocks above the 50-day moving average and 200-day moving average. This is for the S&P 500. You can see we're getting some strength coming in, but when you look at where we are in terms of what this is doing, there's just a lot of weakness here. Stalled in the 200-day moving average. You can see that it really is just in a rotational pattern, still not improving substantially as price continues to move higher. In the NASDAQ, you can see the same thing is occurring. We got a little bump in today's trading. This was the 15th, so that was last week. So it really does not give us an indication that there's strength coming into the market, even though we saw a higher high in today's trading. And in the 200-day, stocks trading above their 200-day moving average, a little bit of a tick up, but really nothing to write home about that would suggest that we're going to see a continuation of this move higher. The same thing in the Russell. Russell really showing a lot of deterioration, and that suggests then that potentially the Russell could be sending us a signal. And the Russell typically is not going to follow along because while the NVDA is in, I think it's in the S&P 500, maybe in the NASDAQ also, it is not in the Russell, of course. So it is lagging at least at this point in time. So keep an eye on the Russell. If it trades below 196, that could be a signal that we could see a test of this gap in both the spiders and in the Qs. Going to be interesting to see if NVIDIA can continue to hold where it is, at least at this point in time. This is a chart of NVIDIA on a 15-minute basis, so you can see pretty easily the gap that occurred on Thursday after the announcement on Wednesday. We had some follow-through today, and then, of course, some retracement of that follow-through. I'm going to watch what happens right around the 769 area in NVIDIA. If it begins to trade through that, and of course if it begins to trade through that gap, it would suggest a lot of weakness coming in, and that this move was speculative and really well overdone. Now, the other thing is, even if NVIDIA continues to move higher, and there's some analysts that are suggesting that NVIDIA will reach $1,000 or better a share, it's going to be difficult for NVIDIA to continue to drag the rest of the market higher unless we begin to see some of the other stocks in terms of market breadth beginning to trade higher as opposed to lower. So the key is going to be in volume and market breadth. And once again, as I've said before, volume is the key. It is the fuel that drives the trend, and if it begins to run out of fuel, then the trend may be coming to an end. So watch what happens, especially on higher highs with volume, and then watch what happens with breadth. You can see pretty clearly the divergences that are occurring. I'll pick this back up on Monday for subscribers. Have a great weekend, and let's see how we open the week next week.